the very man to discuss that is David Wu, CEO of David Wu Unbound. This is a global forum devoted to promoting fact-based debates. David previously worked as the global head of FX and rates over at Bank of America. David, good morning to you. The bond market is debating fiscal largesse and soft landing. You're looking at the political outcomes. The Bloomberg poll this morning says there's a dead heat in the swing states. You're pretty convinced that Trump is going to take the White House. Why? And what's your betting on that?
Yeah, I mean, thanks for having me. Yeah, I think there's a 75% chance I think Trump is going to win, on November 5th. And let me tell you why. First of all, as we all know, pollsters have gotten the last two elections completely wrong. In fact, polling errors were even bigger in 2020 compared to 2016. Now, this is the reason why I tend to focus only on pollsters that have a good track record. If you look at the last two presidential elections, Trafalgar Group and Insider Advantage have by far the best track record in terms of being more predictive, especially among the battleground states. And both of these pollsters currently have Trump ahead by about 2 points in North Carolina, and Georgia, Pennsylvania, and Michigan. Of course, Trump, if he wins only 3 of these 4 states, basically the election is a lock. But there's also more to that. If you think about the key demographic groups, Trump is doing a lot better among blacks and Latinos compared to how he basically did in 2020. Interesting. There are a lot of black people in Georgia, and there are a lot of Latinos in Arizona. Moreover, Trump actually is currently leading Harris by 13 points among white females without a college degree. And guess what? There are a lot of those in Michigan and Pennsylvania. So whether you look at momentum, you look at the most accurate pollsters, you're looking at the demographic groups, all of which will suggest that the momentum is very much with Trump this time around.
David, what about down ballot Senate and congressional races? Because for this market, that matters hugely, inability to get policy through. Do you want to price in at this moment the most extreme, the most whatever have you of Trump policies and assume that the red sweep is also going to happen?
Yeah. I think the red sweep is likely to happen. I give it a 50% chance. I think the Senate is an easy call, right? I mean, the Republicans are leading in West Virginia, in Montana. If they keep Texas, Cruz keep the seats, they have 51 seats in the Senate, which will be enough, by the way, to confirm all the Trump appointees once, basically his administration's up and running. Now, I think the House race is less clear because House race, is all over the place, honestly. But I would say this, which is that you have to go back to 1984 to see a situation where the Republicans won the presidency and the Senate and lost the House. So I think from that point of view, what I'm saying is that the probability, if Trump wins, the Republicans win the Senate and the Republicans somehow lose the House, I don't quite believe that. Now, so from that point of view, I think the sweep is a very good chance. Now, as you said, right now the market is starting to get into this sweep, basically, mode. And this is why, we've seen inflation break-evens going up, gold prices going up over the last 3 weeks. I mean, all the inflation-linked assets are going through the roof because people think Trump and things sweep is going to lead to higher inflation. The only question I would basically disagree with, I don't think that should be taken for granted.
Look, the thesis that you put forward there, David, is in part reflected in these markets, partly by fiscal largesse and partly by the risk of stagflation and a Fed that would have to either pause or reverse. Can you combine that narrative? Let's deal with the bond market first of all. Two's dropped 47 basis points since a jumbo cut. 2016, yields spiked by 100 basis points. So we've traveled a great deal of angst so far in the dollar, in the bonds, and in the gold market.
Exactly. Now, I would say this is what's going on. I think it's a combination. Obviously, I thought it was a big mistake for the Fed to have cut 50. So I think what the market is doing, has been doing the last few weeks, simply unwinding, that mistake, so to speak. And I think even the Fed probably would admit if they knew what they know now, they probably would have done 25. But be that as it may. But I think, the biggest part of the move in the bond market and rates is the inflation break even as opposed to real yields. What it's telling me is that the market is thinking that Trump is more likely than they thought basically a month ago, and that is driving up inflation expectation because, as you said, people thinking fiscal largesse. I happen to disagree with that view, or at least I don't think you can take that for granted. The bottom line is this, to me, is very simple, okay? I don't care if it's Harris or Trump. Both of them are going to be facing a deficit $2 trillion, which means that both presidential candidates will be very, very seriously fiscally constrained. In other words, in my view, Trump will have to look elsewhere if he wants to somehow basically, grow the economy. And there are two things that they've already promised, both of which is actually disinflationary. If you look at what Scott Bessent says, number one, they're going to do massive deregulations. Okay. Number two, they're going to massively increase oil production by 3 million barrels per day. That will basically bring us to 16 million barrels per day. Let me tell you that if that happens, oil prices are going to be in the low 40s.
Hey, David, I got to jump in because I want to squeeze this in here because we don't have much time left with you. You write that there's a 75% chance that Israel might counterattack Iran before the next U.S. election. Only about a minute here, David. But how would that shape and change everything you just told us?
Yeah, I'm sitting here in Israel. I mean, if you think about what happens, if Israel attacks Iran, I'm telling you, you're looking at all-out war. That means lower stocks, lower rates, and higher energy price, which are exactly the opposite of the so-called Trump trades at the moment. So I would argue that over the next week, there may be even better opportunities, better levels to enter into Trump trades. I would be holding my breath.
Okay, David, we appreciate your time this morning. That is David Wu, CEO of David Wu Unbound, passionate on the results of this election to come. This is Bloomberg.